Great stuff. So good evening, guys, and welcome. Welcome to the Real Estate Investing webinar with the Wealth Academy. So let's get right on to business. So guys, my name is Lonabo Fololo. For those of you not familiar, I am an entrepreneur. I am an investor. I'm a cryptocurrency advocate and entrepreneur. I have been investing in, but I bought my first property in 2009. But we'll talk about that as we continue. One thing that I've committed myself to actually doing and being, and that is to be a lifelong student when it comes to wealth creation, right? That's what I've committed myself to doing, to be a lifelong, student when it comes to wealth creation. The world is changing so much. There's so many different ways people can, generate income. But what I've realized over the years, is that, we don't really have an income problem, right? And when we do overcome, maybe initially we do, but when we do overcome the income problem, the secondary problem that we actually have, which is a big one, is not knowing what to do with the income that we generate, right? So that's what we're going to be covering today. So if you're here today and it's your first time, just give me, a thumbs up emoji. And, if you are wanting to learn about property investing, let me assure you one thing. It is a lifelong learning, right? I started learning about property when I was doing my second year. This was 2007 when I started learning about property, in a very serious way. So this webinar will give you, pointers as to why property. If that's the only thing we achieve tonight, we would have achieved our goal, where if we can give you, sort of like a conviction as to why property investing is, the cornerstone for wealth creation, right? And why it has been like that for generations, right? So the question is, Mr. Fololo, why property? I mean, of all the things that exist today, cryptocurrencies, NFTs, there is tendering, there is logistics, people are having trucks. Why are you talking about property, right? So now, as I'm going to answer that, I want us to understand two things, right? Maybe I'm going to cover this more as we continue. When it comes to property, you've got two people. You've got investors and you've got entrepreneurs in the property space. Those are two different people, right? Especially, also in other sectors like cryptocurrencies, you've got investors and you've got entrepreneurs, right? So myself, I'm both an investor and an entrepreneur in both cryptocurrencies and property. Can you believe it? So now, over the last, thousands of years, property has been the cornerstone for wealth creation. Wars have been fought over property, right? Things have happened in the name of property. Why? Because property is a cornerstone for wealth creation. That is why it's called real estate. It's actually coming from royal estate, right? It used to be something that belongs only to kings, right? That's why it's called real estate. So 90% of all the millionaires over the last, few thousands of years, you'll realize that, these people actually became millionaires and billionaires through property, right? And even those that become, rich in other sectors, guess what they do? They basically take their money and invest it into property. Why? They understand that property is the cornerstone for wealth creation. Property is the biggest asset class in the world. It's worth over $260 trillion. In South Africa, it's worth over $6 trillion rands, right? Ask yourself, how many people actually do have a stake in that 6 trillion, right? And over and above that, it's still going to grow. If you look at what the UN is estimating, they're saying that by the year 2050, more than half of the world population will be living in urban areas for medical facilities, for work, related activities, for educational facilities. So it only makes sense for people to continue to urbanize. And as they do so, guess what's going to happen? Their demand for property will continue to rise. If you look at the population stats over the last few years, you realize it's been doing one thing, and that is it's been going up. So whether it's in recession, whether it's the pandemic, people still need to stay in a property. So that's why property, remains very resilient, irrespective of what we actually encounter as human beings, right? So let's talk about some of the few benefits of investing in property. Again, guys, There is no way I can exhaust everything that there is to say in this one setting, but we'll try to cover as much as we can. Now, property is a catalyst for economic growth. Every government in the world knows this. And what does this mean? This means that, whenever the economy is hitting a slump, it's slow in terms of, it's a bit sluggish. We've hit a downturn, and the governments and the industry, they actually want to stimulate the economy. The number one industry they look to is what? Is real estate. Why? Because if there's activity in real estate in terms of development of real estate, it affects every other, sector. It affects manufacturing, it affects mining, it affects, all sorts of different sectors, which, employ people in large numbers. So one sector that the government really wants to stimulate all the time is actually real estate, right? Which means the government is then forced through the tax authorities and so forth to partner with people who are entrepreneurs in this particular space, right? So they partner with entrepreneurs and they partner with certain type of investors, right? So that's one thing, right? And it's a catalyst for economic growth. As a result, your banks, your government, everybody wants to see it grow and thrive. Number two, unlike most assets, real estate gives you cash flow, right? It doesn't just appreciate in value, but it actually gives you cash flow. And that's the type of properties you want to be investing in, the one that are actually going to give you what? Cash flow. And the other amazing advantage is actually what is called tax benefits. And there's so many tax benefits when it comes to real estate investing, whether you are renovating inner cities, whether you're actually building new developments, or whether you're actually buying new developments and basically renting them out, right? So if you look at it this way, now, if the government wants to stimulate this economy, right, and they want to do so through real estate, there's so many different ways they're going to do it, but let's talk about this particular one. So you've got a developer that says, I'm willing as an entrepreneur, to put my money, my capital at stake and basically develop some townhouses or apartment blocks or whatever the case is, right? So the government incentivizes this person who is called a developer. Now the next person, the developer is going to build these thousands of houses. Not everybody can afford to buy a home, or not everybody wants to buy a home, right? People want to maybe rent, whatever the case is, homes that are affordable and so forth. Now, the next person that needs to be incentivized is the buy-to-let investor, right? The buy-to-let investor says, okay, it's fine. I understand all the benefits there is to investing in property. I am willing to buy a townhouse and rent it out, to tenants, right? Because I understand that my tenants will pay for my bond. My property will appreciate in value for myself. I will get equity from that, that I can use to do whatever that I want to do and so forth. But here's the thing, right? So the government says through the tax authorities, there is a section called Section 13(6) in the Income Tax Act, which says if you own, we can spend an hour just talking about this one. But if you own at least 5 units, brand new, that you bought from a developer, right? And you're renting them out, it's not for your own primary business. It's not for your primary use or your primary residence. You're renting them out, you're running a business, and that's one tick. And they're all in one entity. Then SARA says, you know what? If it costs you, maybe let me see if I can write here, so that I can try and explain this. So let's say you buy a townhouse for 800,000, right? You buy a townhouse and you buy it for 800,000. Now, that's the price, but then that price includes the price for the land it's built on. It also includes the improvements, which is the superstructure, right? It's the building of the bricks and mortar, so to speak. So you'll find that in that 800,000, they might allow for, let's say, 200,000 for the land, and the remaining 600,000, let's say now that's for the improvements, right? 600,000. Now, what SARA says is that, out of this amount for the improvements, right? Now, you can actually get a deduction of up to 55%. You can get a tax deduction from your income tax of up to 55%, okay? Now, what does this simply mean? This means that over a 20-year period, you've got 600, you've got, let's say, whatever, 50, whatever 55%, let's say for argument's sake, 55% of that, let's just say 350,000 or 320,000 rand, right? So now SARS says, so, you can then deduct, you've got a tax, let's call it a tax credit of 320,000, whatever the amount is. That is spread over a period of 20 years, right? So whatever tax you, your income tax you incur in that particular year, you've got an amount to offset it against every single year, which means you could then easily build, your property portfolio tax-free. Do you understand? So this is one of the major benefits that most people are not aware of, right? So, and there's just so many. This is just one called the Section 13(6). And over and above that, you buy an asset that's appreciating in value. And I'm going to give an example of a property that, that I bought that's appreciating in value even before I actually start paying my bond. So we're going to talk about that. And also, if you go to the bank right now and you say, bank, your shares have been doing so well. I love you so much. I've been so faithful to you, bank, for 20 years. I basically want to borrow money from you so that I can buy your shares. Guess what the bank is going to do? They're going to say, nah, we ain't doing that, right? If you go to the bank, you say you want to borrow money, you want to actually start a business, guess what's going to happen? Chances are you're not going to get that money, right? But the minute you say you want to buy property, you want to invest in property, the banks listen up. Why? They understand the benefits of investing in real estate, and they understand the shortage that comes with real estate. And over and above that, they actually have a mandate, to actually assist and, and give out loans, right? So this is a very, very important to understand. Over and above that, this is how money gets created in the economy. That's how money gets, because when you go there to borrow this 1 million rand to buy a property, it doesn't mean the bank is going to take from somebody else's money and give you that 1 million rand to go and buy the property. No, because of what is called, fractional reserve banking system, they basically create the 1 million or a portion thereof, maybe 90% of that or 95% of that, depending on what the reserve requirement is for that particular time. So they'll then create this money. Now this money is now added onto the economy, right? So it causes the economy to grow. So real estate is very, very important because of that. So that is why it's one asset that you can use other people's money to get involved, which is, it can be a bank, it can be private investors. People know of only the 5 banks. There's about 60 banks registered in South Africa today. Most of them, they're not mainstream. You're not going to see them, but these are these are just some of the things that you get access to with what I'm going to talk about at the end of this session. So it is an inflation hedge. It does beat inflation, unlike money sitting in a bank or any other fiat-based investment. It does beat inflation, right? So, and over and above that, it's one asset that you can basically leave as a legacy for generations to come. I know of a trust in the in the UK. This is a 400-year-old family trust, and it's been used to basically pass wealth from generation to generations. We've not been able to do that because of so many different reasons. Now, because of real estate and the tools which we're going to share today, we can be able to do that to make sure that our great-grandkids never have to start from zero like some of us did, right? So now, one thing that I realized between, you basically got 3 clusters of people in the world, in the main. You've got rich people, you've got the middle class, and you've got poor people. In the main, all of these people have some form of income, no matter how small, no matter how big, right? But what differentiates them over time is what they do with the money, right? So they've got a source of income, whether it is a job, whether it is a network marketing opportunity, whether it is a small business, well, it doesn't matter what the income is, where the income is coming from, whether they are trading forex, they're trading cryptocurrencies, but they've got a form of income. But the question is, once money comes into your possession as income, what does it do? What direction does it take? This is where the rich, the poor, and the middle class get separated, right? So let's start with, with the poor, right? So now money comes in from the job, right? So let's say, it's a job or it's a small business there, or whatever the case is, right? So what happens is that the money that comes in, it goes through this way. This is what their financial statement look like, right? Sorry about that. So that's what their financial statement look like, okay? Money comes in, they pay rent, pay food, transport, and that's it. Money is gone, right? And they repeat the cycle all over again, right? So there's so many things they can do. They can basically increase their income, but what normally happens? Most of us who basically come from poverty, when we increase our income, guess what happens? We also increase our expenses. We also increase and add liabilities, right? We move from poor and we jump straight into the middle class, and guess what happens? We increase our liability. So which, takes us, to the middle class. The middle class income looks like this. Money comes in, it's money coming from, their business, network marketing, cryptocurrency trading, forex trading, whatever they're doing, or they're professionals, they're doctors, they're accountants, but this is what happens, right? So the money comes in and it goes and takes care of their liabilities and their expenses, and the money is gone, okay? And the cycle repeats. Now, most of the time, this is because of education, but miseducation. Let me explain what I mean by that. When we talk about miseducation, now we are taught that your primary home is an asset, right? And your car is an asset, right? Now, let's pass a myth right there, right? Now, the classical definition of, or the rich people's definition of an asset is something that generates income, that puts income in your pocket, right? That's what they call an income. And have you noticed that whatever is an asset today can become a liability tomorrow, and whatever the liability today can become an asset tomorrow? So these things change. It depends on the word cash flow, right? Depending on how the cash is flowing from that particular asset. So as long as you are taking care of it and paying money every single month, it's basically a liability, right? And it doesn't make it wrong. It just simply says that we need to understand it, correctly labeled, so that we can find ways to finance it just like the rich do, okay? So now, of course, rich people stay in mansions, they do drive expensive cars and so forth, but how do they finance those things? That's where things get to be a little bit different, right? So what these guys do is, they get an income from their job, from their business, and what they do is that, as the money comes in, it goes straight into the asset column. What does it do here? It basically, builds an asset portfolio, right? If you reach that poor dad, of which you are fans of at the Wealth Academy, he says one thing. He says the rich don't work for money. That's number one, of Rich Dad's rule. The rich don't work for money. They work for what? They work for assets. Assets which then will generate income. And then that income then takes care of the expenses and the liabilities and so forth. It does not mean these people live below their means. They don't. They just find a way to finance their means, okay? Not to live below their means, right? So this is basically the crux of the matter. This is what differentiates, rich people from poor people. And over and above that, there's so many different asset classes, where people can be able to generate income. I mean, you can start a business, right? There's also paper assets. There's also commodities, including cryptocurrencies, and there's also real estate. Now, what makes real estate different? One, you can buy it with other people's money. And number two, there's so many tax benefits that come from real estate. And number three, it gives you cash flow, right? All the benefits that we've already outlined, that what makes real estate to be different. Now, if you want to win in real estate, you cannot do it alone. It does not matter how brilliant you are. It's not possible, right? A guy who is a mentor to me once said, there's never enough time in one lifetime to learn everything that there is to learn, right? You can know a little bit about everything, but the easiest way is to build the power team around you, people that you can work with, people who specialize in different things, that then can help you to basically build your real estate portfolio, right? So the people we are talking about, the primary people that you really have to have in your team, you need to have real estate agents, or what we commonly call, property strategies, because real estate agents are not made the same. I was a real estate agent. I know exactly what I'm talking about. Real estate agents are not made the same. Some are just concerned about, making the commission. They will tell you, buy the property in your name, no, do this, and it doesn't matter. It's like they will give all sorts of advice, which might not necessarily be the best advice as far as understanding your long-term objective about building your real estate portfolio. So what you want people who are property investors themselves, right? And those are your property strategies, right? You need conveyancers. There's a deal that you want to sign. You need someone to have a look at you want to buy a property. What the title deed says. Are there any onerous conditions of the title deed which might inhibit you from what you want to do with the property? And how do you structure, an offer to purchase or an agreement of sale? All those sorts of things. That's where you need a conveyancer. Conveyancer is a specialized attorney who specializes in property law. That's the only thing they do, right? You need estate planners, right? People that will help you, to build your power structure, your wealth preservation and protection structure, which we might touch on as we continue. You need, your build professionals, right? Your quantity surveyors, civil engineers, contractors, plumbers, electricians. You need those people to have on dial as a property investor, right? And over and above, you basically need investors and partners. It's not possible for you to do every single deal that falls on your lap on your own. You understand? You're gonna need to have partners that you can invest with and tackle deals with, so that you make sure that you can get to as many deals as possible in a short space of time. And you definitely need mentors, people who have walked the road, people who have done, so that it can shorten your learning curve, right? Most of us will realize after the third property that we bought in our personal name that we shouldn't have done that. These are the implications and so forth, right? So you basically need mentors who have done what you want to do, so that you can shorten your learning curve. Now, I'm not going to dwell so much into, but this is just, a story on its own about my property journey. But, these were the first two properties we bought together with my wife. This was bought in 2009. This was our primary residence. And, so this was in East London, guys. And one mistake here is that we basically locked our capital into a primary residence. As a result, we only had 200,000 and so forth, or that we could qualify for, which we were able to buy this one. This we bought, it was a distressed property. We had to fix it up here and there, but we got it 50,000 rand lower the market value, right? As they say in property, you don't make money when you sell, you make money when you buy, okay? So mistake that we made here is that we try to run, to manage the property on our own. You don't do that. You treat it as a business, get a professional to manage your property portfolio. You don't want to work in your business, you want to work on your business. Those are two different things, right? And I mean, we tried, we bent our fingers real bad, okay? So, I started construction management, like I said. I ended up selling properties because I was so in love with the property, with property as an asset class. I thought this was gonna get me into proximity with the real estate, my favorite asset class, and will actually allow me to, to buy more properties faster and build my property portfolio. That did not happen, okay? That did not happen. So long story short, I sold properties for about 7 years of my life. And in that 7 years, I've bought and sold properties and so forth. I traded properties, and that's something that you can do, but that's not something that I do personally or I encourage. Why? Because there's so many tax, you trigger every time you buy and sell, it's a tax event, okay? And, so it's a taxable event, and over and above that, you never really get to build long-term sustainable wealth in that way. You want to hold on to properties, rent them out, let somebody pay for your bond, give you income and so forth, and let the property appreciate in value, for yourself. So these are just some of the few deals I've done. This was a redevelopment. This was a house in the township. And guys, the township market is so important. It's unfortunate that I don't really like the township market much for so many different reasons, but it's very potent, guys. If you can get it right, you can make money. So I bought this property for 120,000 rand. I added a third bedroom with an ensuite. I added a garage, boundary wall, tiled it, throughout, new bathroom and so forth. I ended up selling the property for 450,000 rand. And guess what? I sold the property even before I could lay one brick. Before I could lay one brick, I had a plan drawn. I sold the property from a plan. Okay, that's just some of the the deals that are available, guys, in the township market. So the next deal, and I took capital from a few deals, and I bought this land. This was again my primary residence, right? So here I built, a 2-bedroom apartment, open plan kitchen with a bathroom and so forth. The goal was to build a dream home right in front. Okay, now, and that did not happen. I ended up having to sell the property. It was in Blue Water Bay, magnificent views all the way from Kucha to Summerstrait. It had beautiful views, but because of we kept on getting robbed and so forth, we ended up selling the property. So what was the lesson there? You might not necessarily want to start with your primary residence if you want to build, unless that's really something that you have to do. Then it means that you have to be an entrepreneur and raise your income level so that you can quickly be able to afford other properties as well, right? And some of the deals we have done, I mean, we've got, we've got Airbnbs here in the Port Elizabeth beachfront. And this was a dream of ours. I used to say that I can't be born in Port Elizabeth with such a beautiful coastline and never own a property in the coastline of Port Elizabeth, right? And that dream was realized. I mean, we own, 4 units in this, in this building, and they're all doing Airbnb. They're doing incredibly well. There's so many things we could discuss there about the lessons. How I got into those deals. Again, there, I was able to buy at the right time. This was just after, lockdowns, right? So I made money on my buy there, right? Those properties have appreciated in just a short space of time. So, and this is other one in Four Leaf. We own 5 properties there that we're renting out. There's a few others that we have done, guys. This is another one in Fairview. This is we bought one piece of land. We built 2 properties. We sold one, and we're renting, the other one. This then brings your cost for the second one that you're renting out down, because you basically move the profits, from the one that you sold into the one that you're renting out, which then means your return on investment is basically quite high, right? So that's just some of the things that deals that we've done. Now, I've then ventured into multi-lets because, guys, there's so many different ways you can get into property. There's student accommodation, there's multi-lets, there's townhouses, there's Airbnb. I mean, there is commercial. In commercial, it's even a wider space, right? There's so my boss is telling me that I must finish up. They told me that I mustn't take too much time because I normally take more than an hour. So okay, moving right along. So guys, here is another very exciting deal. So let me tell you about this one, right? So we signed the offer to purchase on this particular one. It's in Stellenbosch, right? Yeah, so I'm going to join the Stellenbosch Mafia very soon. So this is in Stellenbosch. We bought it for 2.15, and we signed the offer to pay. This was an off-plan development. So we bought it for 2.15. I think we signed it last year, sorry, this year around July or so, something like that, or earlier. Anyway, so the property only got finished last week, Wednesday, right? So now when we bought the property, it was valued at 2.15. On completion, the property is valued at 2.295. I've not even paid a cent. I've made an equity of 145,000 rand immediately. I haven't paid nothing. So this is going to be a multi-let. I'm putting 4 students in there. They're going to pay me, 6.5, rent per student. We estimate between 8 and 12% in that particular, position where the property is. So if you look at the current price of the property right now, and let's say it doesn't escalate by 10 or 12%, it only escalates by, 8%. That's another 183,600 in equity that I would have got. So in a space of what, 1.5 years or so, I would have made over 300,000 in equity. Equity that I can withdraw and put it as a deposit on other properties. Okay. So guys, these are just some of the stuff that you will learn, from the Wealth Academy. This webinar is just to simply, give you awareness. Now, Here's another very example. One of the things that we teach about is how to set your wealth structures properly, right? So let's make a few assumptions here, right? And so if you buy a property, let's say you own. So let's say you own a property and it's paid off, it's in your name, 4 million, right? Woohoo, great stuff. And your cars combined, let's say it's valued at 2 million. You don't owe anyone, right? You've got other investment properties and they're valued at 6 million, right? And let's say you've got even a life cover. Those are some of the things we'll teach you about why a life cover is very important, right? So let's say you've got a life cover for 10 million rand. And you've got other assets, valued at 1 million, maybe jewelry or whatever. Let's say your total net asset value is 23 million. And all of this thing is in your name. Why? You never knew better. Guess what's going to happen? There's something that is called estate duty tax, where SARS says, you died rich, I want 20% of your money, just because you died rich, okay? So now that is called, estate duty tax. Now, so there is an allowance of 3.5 million for estate duty tax. So if you deduct that and this is obvious, these are rough numbers, you'd have to refer to an accountant or a lawyer to basically, tell you how these numbers work. But these are just rough estimates. So they will deduct 3.5 million, and on the 19.5 million, you will then basically pay 20% to SARS, right? That's your estate duty, though. So that will be 3.9 million. And then you need to pay someone called an executor who's going to wind up your estate. Your executor is going to charge you, 3.5% plus VAT. So that's 4-point-something%, right? Which is another, over 800,000 rand. So in total, that you would have given to SARS for nothing would be 4.7. 4.7 million on an estate of this particular size, right? So if you are my friend, I expect you to strive to have way more than this, right? So that means if you don't structure your stuff properly, you're gonna pay more to the receiver, okay? So the question is where to from here. Very important, you need to identify your why. Why do you want to build wealth, right? Why is it important for you, right? Are there other people, why is it important for you to build wealth? And number two, you need to set your goals, all right? Because, as much as, yes, you can buy some properties without, an income, but you realize that it's much better with income, right? Way much better with income. So that's why every property guru out there, they basically are doing other stuff for them to earn more income. They're selling books, they're doing this, they're doing that. Why? They want to earn, because more income they have. Look at Grant Cardone, look at Robert Kiyosaki. The more income they have, the more they can put as deposit on more and more and more property and actually grow their portfolio up to infinity, okay? So now you need to set your income goals. You need to create your wealth builder structure. You can consult us for that. We're gonna put the link to our Telegram channel where you can get hold of us, and we can then help you further. Marcia, are you able to put the comment? Yeah, Telegram. So we're gonna put the Telegram link on the comment section, where you can engage us further for questions and answers and how to get started. So, but the bottom line, guys, you need to continue learning, right? It's not going to be, you're not going to attend one seminar, one full day seminar, and you know it all, you're ready to make millions, right? So it's going to be a process. But in that process, you basically need someone who's going to hold your hand, right? And this is basically why, it's funny because people ask me to create this. People, my friends, asked me to create this. Why? Because I was sharing information and they were saying, and because I was not doing it as a business, I can't hold your hand. I hold people's hand, yes, but I can't do it to a lot of people, right? So they said, look, we've been charging ridiculous amounts of money for far less information, right? And, could you please do this for us and make sure that, you create a system where we become your customers and you can coach us on how to build wealth with property. And that's why the Wealth Academy is basically here today. So we do this in different ways. We've got membership structures. We'll communicate the benefits again on Telegram. Yeah, but it basically means that you get access to our academy coaches. Right now, you're seeing me talk. I'm not the only one at the Wealth Academy. I've got people who specialize in auctions. We've got wealth coaches who specialize in multi-let, student accommodation. So we've got different people who will be able to do whatever journey you've chosen. There is people who will be able to coach you, right? So at the Wealth Academy, we've got these Wealth Academy coaches that will then help you. And over and above that, we've got the membership structure, which then gives you access to certain information, certain training, certain courses, and so forth, right? So this is basically the smallest, the starter plan. You can either pay monthly or you can pay annually. And then there's a pro investor, obviously with much more, benefits. You even get, discounts on setting up your trust and your structure, in fact. And you've got the mogul investor. And that is it, guys. So thank you very much for joining us. Unfortunately, my boss says time's up. So meet us on the Telegram group and let us continue this session on the Telegram group. The session, the link is on the comment section. Thank you very much for joining us, guys. Love you all. Stay blessed. Above all, let's continue to learn. Let's continue to create wealth. Cheers.
Hello guys, and welcome to Wealth Academy Affiliates. My name is Ngoni. So today we're going to talk about the business opportunity provided by Wealth Academy as you partner as an affiliate. So before we dive deep into how much you can earn and all of those things, let's just talk about what Wealth Academy is. For it is the product that you'll be selling out there to customers. So what is Wealth Academy? Wealth Academy is a property investment educational platform. Members of Wealth Academy will get access to our training programs, mentorship, deals, and be part of a property investors community. We have built a world-class web application where members can log in and gain access to items depending on the plan they purchase. Some of the things that you get in Wealth Academy are property courses designed by professional property and personal finance gurus to help you kickstart and thrive as an investor. You also get property finance advice. Get your accounting and documentation right and learn the secrets that the wealthy use to create unlimited wealth. You also get mentorship programs. Be connected all the way and ensure that you always make the right decisions about your property portfolio and structures. So how much does it cost for you to become a member of Wealth Academy? We got 4 plans that you can get into. The starter plan. The starter plan is 250 Rand a month. You can either pay a monthly subscription or a yearly subscription of 2,364. The Pro Investor is 450 Rand a month, or you can pay 4,500 per year. Mogul Investor is 750 per month, or you can pay 9,540 per year. And last but not least, the Wealth Elite plan is 2,500 per month. So these are some of the benefits of being part of Wealth Academy. So number 1, you get access to a world-class learning platform, access to sought-after property, finance, and personal development mentors. So you will get access to webinars and one-on-one consultations, and also you will get valuable courses. You also get access to property experts and recommended service providers, access to discounts on services. So with that being said, let's talk about the affiliate program. So with the affiliate program, you get paid 20% every time you refer a person who subscribes for a plan. You also get 20% every time the person you refers renews a plan. And lastly, you get 10% whenever a person buys an item on the Wealth Store. So if you introduce 50 people who are going to subscribe to the starter plan, you're entitled to a 2,500 monthly commission. Of course, this depends if the customers have paid their subscription. If you introduce 50 people who are buying or subscribing to the professional plan, you earn 4,500 per month, and that's recurring. If you introduce 50 people who are going to subscribe to the Mogul plan, you're gonna earn 7,500 recurring a month. And of course guys, this depends if the customers have paid their subscription. If you introduce 50 people who are going to subscribe to the World Elite plan, you're gonna make 25,000 every month. And of course, this depends if the customers have paid their subscription. So let's take for instance, you've got 50 people on a starter plan, 50 people on a professional plan, and 50 people on a mogul plan, as well as 50 people on the World Elite plan. So your total monthly earnings will be 39,500. And of course, this depends if the clients are paying their subscription. As long as the clients are paying their subscription and your subscription as well is active, you'll be entitled for commissions each and every month. So how do you become an affiliate? To become an affiliate, you must subscribe for any plan and stay as an active subscriber. So we don't restrict on the plan that you bought for you to get commissions. Take for instance, even if you're a holder of a standard plan, you can still earn full commissions from introducing someone who buys an elite package. So your affiliate application will be sent automatically and will be approved in a few minutes. Now you can log into your affiliate account and share your link with the potential customers. Promote World Academy and start to earn. And that was it from me guys, and if you want to join the World Academy affiliate program, go to www.worldacademy.co.za/affiliate-program. The URL is on your screen, and I also leave the URL in the description below. So go ahead and sign up and see you in the inside.